Welcome back to Investors Point of View. Hello to all our community members, students, and everyone tuning in. Today, we're doing a deep dive into Oracle's fiscal year 2026 second quarter results. And our mission, really, is to cut through the noise and explain what's happening with their huge strategic pivot. They're trading current cash for, well, for future dominance.
That's a great way to put it, because the top line number, looks good. Total quarterly revenue hit $16.1 billion.
Which is up 14% year over year. Solid.
It is solid, but if you really want to understand Oracle's trajectory, you have to look past the revenue for a second. There's one number that tells the whole story.
And that's the RPO, I'm guessing?
Exactly, the remaining performance obligations.
Yeah.
It's basically the value of all their future contracts, money that customers have already committed to spending.
Okay, so let's unpack this, because the RPO number is it's unbelievable. It's at $523 billion.
Yeah. And it's not just the size, it's the growth. That's a 438% increase year over year.
438%. I mean, that's not just growth, that's a complete structural shift for the company. They mentioned huge new deals with Meta and NVIDIA.
It's a massive, massive backlog of work. And that completely changes how you have to look at the company. But before we get to how they're going to deliver on that, we should probably touch on their earnings.
Right. The GAAP-diluted EPS was $2.10, up 91%, but there's a huge catch there, isn't there?
A very big one. That number was significantly inflated by a one-time thing.
The sale of their stake in Ampere.
Correct. A $2.7 billion pre-tax gain. You have to pull that out. But the reason for the sale is key. Larry Ellison framed it as a move to chip neutrality.
Meaning they can work with anyone. NVIDIA, AMD, Intel, all of them.
Exactly. In the AI race, you can't be locked into one stack. You need that agility. And that flexibility seems to be, fueling their core business now.
You can see it in the cloud revenue. That's IaaS and SaaS combined. It hit $8.0 million, up 34%.
And even inside that number, the story is all about infrastructure, or IS. That's where the real acceleration is. IS revenue is up 68%.
68%. So that's the raw computing power customers are buying for AI.
That's it. The application side, SaaS, is stable. Fusion ERP is up 18%. NetSuite up 13%. Good, but not explosive like IA.
And what about that multi-cloud strategy, letting customers use Oracle databases anywhere?
Oh, that's paying off big time. Their multi-cloud database business was the fastest growing piece of the company, up an astonishing 817% in the quarter.
Wow. Okay, so that much demand must require an astronomical physical build-out.
It does. They're up to over 211 live or planned data center regions now. And more importantly, they're building 72 Oracle multi-cloud data centers inside Amazon, Google, and Microsoft's clouds.
Physically embedded in their competitors' infrastructure.
It's a huge part of the neutrality promise. So we've got this unprecedented future revenue locked in, this massive expansion to deliver it. But what does that mean for their cash right now?
That's the billion-dollar question, or maybe the negative billion-dollar question. They're betting everything on AI, saying the top 5 AI models are running in their cloud.
A very expensive bet. And you see it when you contrast two numbers. Their operating cash flow is healthy. It's up 10% to $22.3 billion over the last year.
But the free cash flow?
The free cash flow tells the real story. It went from positive in previous periods to deeply negative.
Staggeringly negative. Negative $13.181 billion for the last 4 quarters.
Right. And that massive swing isn't a sign of weakness. It's a receipt. It's the bill for all this growth. Their capital expenditures, or CapEx, just rocketed up to $35.477 billion.
So they're literally pouring every dollar they have, and then some, into building the infrastructure today.
To support that $523 billion RPO backlog tomorrow, they are explicitly choosing future contract revenue over immediate cash flow. It's a massive calculated gamble.
So the situation is crystal clear. An unprecedented investment, burning cash now to build the foundation for a record-breaking backlog. So looking at Oracle's massive spending on cloud infrastructure, is this high-risk, high-reward strategy the right move, given the massive RPO backlog they've secured? Write your opinions in the comments section below. Thanks for being here. For more financial points of view, you are more than welcome to subscribe to our channel and give it a thumbs up. See you on the next one.